Hey there, have you ever wondered how you can turn a small investment into a significant amount of money over time? I know I have, and that's why I've been researching and experimenting with different investment strategies to find out what really works. In this video, I'll be sharing with you 5 simple investments that can potentially grow your $1,000 into $10,000 in just 5 years. Now, before we dive in, I want to make it clear that investing always involves some level of risk, and there are no guarantees of returns. However, the investments I'll be sharing with you are relatively stable and have a proven track record of performance over the long term. So, if you're ready to learn how to grow your wealth, let's get started. First up, we have high-yield savings accounts. Now I know what you're thinking. Savings accounts are boring and don't offer much in terms of returns. But high-yield savings accounts are a different story. They offer a higher interest rate than traditional savings accounts, typically between 1.5% to 2.5%. This may not seem like a lot, but over time it can really add up. For example, if you invest $1,000 in a high-yield savings account with a 2% interest rate, you can earn around $20 in interest per year. That may not be a lot, but it's essentially free money. Next, we have index funds. Index funds are a type of investment that tracks a specific stock market index, such as the S&P 500. They offer broad diversification and can be a low-cost way to invest in the stock market. Historically, the S&P 500 has returned around 10% per year over the long term, although there have been some ups and downs along the way. So if you invest $1,000 in an index fund that tracks the S&P 500, you could potentially earn around $100 per year in returns. That's a 10% return, which is pretty significant. Another investment option to consider is real estate investment trusts, or REITs. REITs allow you to invest in real estate without directly owning physical properties. They can provide a steady stream of income through rental properties or other real estate assets. Some REITs have historically returned around 8 to 12% per year, although this can vary depending on the specific investment. So if you invest $1,000 in a REIT, you could potentially earn around $80 to $120 per year in returns. Fourth on our list are certificates of deposit, or CDs. CDs are a type of savings account that offers a fixed interest rate for a specific period of time. They tend to be very low risk and can provide a guaranteed return, although the returns may not be as high as some other investments. Typically, CDs offer between 2 and 5% interest per year, depending on the term length and interest rate. So if you invest $1,000 in a CD with a 3% interest rate, you can earn around $30 per year in interest. Last but not least, we have dividend-paying stocks. Dividend-paying stocks are shares in companies that distribute a portion of their profits to shareholders in the form of dividends. Some established companies with a history of paying consistent dividends can offer a relatively stable source of income. Historically, dividend-paying stocks have returned around 8 to 12% per year, although this can vary depending on the specific investment. So, if you invest $1,000 in a dividend-paying stock, you could potentially earn around $80 to $120 per year in returns. Now, let's talk about how these investments can potentially grow your $1,000 into $10,000 in 5 years. To achieve this level of growth, you'll need to earn around 60% per year, which is a pretty aggressive return. However, if you're willing to take on a bit more risk and invest in a combination of these investments, it's possible to achieve this level of growth over the long term. For example, let's say you invest $500 in a high-yield savings account, $200 in an index fund, $150 in a REIT, $100 in a CD, and $50 in a dividend-paying stock. Over the course of 5 years, the high-yield savings account could earn around 10% in interest. The index fund could return around 50%. The REIT could return around 60%. The CD could earn around 15%, and the dividend-paying stock could return around 70%. If we combine these returns and assume that you reinvest all of the interest and dividends, it's possible to grow your initial $1,000 into around $10,000 over the course of 5 years. Of course, this is just a hypothetical example, and actual results may vary. but it gives you an idea of how these investments can potentially work together to help you achieve your long-term financial goals. In conclusion, growing your wealth takes time and patience, but with the right investment strategy, it's possible to achieve significant returns over the long term. The 5 investments I've shared with you today are relatively stable and have a proven track record of performance. By combining these investments and reinvesting your returns, you can potentially turn a small investment into a significant amount of money over time. Just remember to always do your research, diversify your portfolio, and be patient, as investing is a long-term game. Thanks for watching, and I'll see you in the next video.